All right, guys. So week 8 we got here. We're gonna tie it all together, really. We're gonna go over what is confluence. I know you guys hear me talk about that a lot, but at the end of the day, um, literally it's just adding extra layers of confidence onto your trades. So the goal of the day is we're gonna teach y'all how to stop making random entries and start building high probability setups by stacking multiple confirmations together, or confluences. So, what is confluence? Multiple reasons in one direction. So it's really just like we said, confirmations that your trade is the trade you should be taking. Um, when we go through that, let's see things up that could add confluence would be the trend, liquidity, fair value gaps, timing, session timing we spoke of, confirmation of levels, and overall structure. The more quality reasons a trade has, the more confluence, the less you need to rely on hope, the more confidence you have, adds to bigger lot sizes and bigger wins. If you know, you know, well, you know, if you know what you know and everything's proven it, everything lines up, take the trade. Double down. Be confident in your setups. That's what we're trying to teach you here. So, just a example about what confluence is. So if a person tells you, hey, go try out this new restaurant, it's really good. Now, if Google says it's a 4.8 stars, your friend already recommended it to you. You show up, the parking lot's packed, right? You see people standing outside in the line. Aren't you much more confident? Like, dang, this is the place to be. This is a popping spot. That's confluence. Just more confident. It's just little pieces confirming your trade idea or the direction, whatever you're looking for. So why is one signal why one signal isn't enough? We see that all the time. People get in trade off of one signal and it goes bad, and it's like, dang, I I thought this was the place to get in. And my question always is how many areas of confluence did you have? Because if it's just one, it's not enough. Um, I like I would say I like 3 to 5. I won't even take a trade if it's under that. So um I like that. One confirmation creates the idea, multiple confirmations create the opportunity. They're um giving you that confirmation and hey, this is the right zone. Can't just enter a trade because the RSI says it's good to buy. You have to say, hey, is this a support level? Is this a bullet market structure? Is this a liquidity sweep, fair value gap? Is this line up with my session timing? Is this a bullish or bearish candle confirmation? So these are things that you got to be looking for to re reconfirm your reason for getting in. If they all line up, like I said, take the shot. The more quality reasons, the more we have the confidence to take the trade. End of the day. So, um, let's see, a little professional versus amateur mindset. Amateur mindset say, hey, it looks good. It feels good. I'm gonna enter. Let me just get in here. I had the feeling that I'm gonna win this trade. Feelings don't get you paid. Feelings get you messed up in the most simplest terms. Professional mindset. What's my trend? What's my market structure? Where is the liquidity lying? Am I here at the right session timing? Am I in fair value gaps or key levels? Where are those at? Am I handling my risk to reward right? Am I too heavy? If it goes a little bit in the wrong way, do I just hop out because I was over leveraged? And then do you have your confirmation straight? But at the end of the day, it just boils down to beginners. Their question is, can I take this trade, guys? Professionals are going to say, how many reasons do I have to take this trade? Why am I taking this trade? I have to have reasons behind my trade. Otherwise, I shouldn't be in it. So what types of confluence do we have? Let's get into the nitty-gritty on these types of confluences. We got the trend confluence. Trend confluence would be the daily's bullish, the 4 hours bullish, the 1 hour's bullish, and our lower time frames are bullish as well. Everything's aligned. Our trend confluence, good to go. Next, we would have is a structure confluence. Um, are the higher highs, higher lows being respected, or the lower highs and lower lows being respected? Um, each of those is pointing you in a direction of structure. So just make sure that your structure confluence is also supporting your overall trade idea. Next, support and resistance. Is there a reaction at the meaningful level that we're looking at? We mark out all these levels each Sunday. When it gets there, is it giving us the reaction that we're looking for? We don't just look at a random price level. Everything's pinpointed, and we're just waiting patiently until it gets to our zone, and we make the move when it gets there. Liquidity confluence. What is that? Would that would mean our stop sitting above highs or lows? Is that a target that we could add to our confluence if there's a target up high and we have a bullish outlook? As we spoke before, everything's lined up. Oh, there's liquidity up there too. Even more of a reason that price is going to go up there. Why not ride the wave up there? Let's take that trade. And time confluence. Are you trading during high volume sessions and overlaps? London session, New York session, that overlap there that we talked about last week. Very, very pinpoint time. Not just a random 2 p.m. and we're here. We're gonna make the money, guys. Everything's got to be planned. So, like we said before, the more confluences that you have and that align, the higher probability to trade. Higher probability trade, more money we gonna make. All right, so the power of time frame confluence. This is a really good one. Kind of example what we spoke about just a little bit ago. Is the daily bullish. The daily is looking bullish. Is the 4 hour bullish. The 4 hours bullish. Is the hour bullish. Okay, so the hour is bearish. 15-minute is looking kind of bullish. 5-minute might be kind of bullish. Rule is trade the higher time frames, enter on the lower. So if it's bullish, higher time frame has the bias. They carry the weight. So if it's bullish on daily 4 hour and 1 hour is in a range, I'm not gonna be jumping in to a sell per se unless I see a pinpoint zone. I'm gonna be knowing that the sells are trading against the trend. The trend is your friend. So be careful going against it, especially depending on what you're trading. Certain things, if it's a trending market, you do not want to be caught up in that. So make sure you know the water conditions before you get in. So I know you hear us talk about sniper entries all the time. I love sniper entries. This is how we build sniper entries. It's not just because we're good or we're just, I mean, we make ourselves good by showing up and making sure we have ultimate confluence on our trades. Um, and that's how we win. So building sniper entries. Sniper entries, they don't come from luck. They come from stacked confirmations. Daily bullish trend. Got a 4-hour support zone. We got a liquidity sweep. Price enters the fair value gap. That's what we've been waiting for. Bullish engulfing candle. And New York session opens. That sounds like a killer trade right there to me. We get that, let's go. But stack the odds. The more odds, the more confluence. Sniper shot. Be the sniper. Take the shot. We did the work. So when talking about confluence, and stacking the confluences, like I said, I won't take a trade unless I have minimum of 3. That's a low probability trade. Still probably something I could talk myself out of taking because it doesn't have the adequate confirmation these days that I like to have. When I was a little bit more of an amateur trader, I would go in with 3s. These days, I really wait for that 5. If I have 5 confirmations, 5 confluences or more, it's gonna be a great day. I'm going in on that trade full tilt, um, with confidence, with my confidence level of leverage, and I know I'm gonna make money. Now, how I manage that trade is different, but the entry of we know that we have above 5 confluences. It could be a trend direction, a market structure, support or resistance. It does it hit a fair value gap? Do we see a liquidity sweep? Is your session timing? Is it an overlap? Is the candles confirmation? Are they showing confirming the reaction at the level or the bullish or bearish that we're looking for? And make sure your risk to reward is strong. If you have 5 of these or any other confluences telling you that line up, then take the trade. But at the end of the day, if you don't and you have 3 or less, I wouldn't take the trade. Not every trade deserves your money. Don't be giving out money to the market. That's where traders really mess up. They make money and then they get in trades that they shouldn't be in and they get the money right back. So be picky with your trades, be patient with your trades, and protect your capital because that's the risk management you're going to need to stay profitable and afloat in these markets. It's really the risk management. All right. So real example, let's see. Gold trade. Love my gold examples. All right, so we got the daily bullish structure. Yep. 4-hour. It's pulling back into the demand zone. Yep, it's coming back. Liquidity sweep below. We already had the liquidity sweep, so headed up. 15-minute bullish forms. Yep. And this is a nice confirmation right here. A perfect example of 6 confirmations stacked. And I'm sure I could find a couple more in here off of the things that we teach. There's a couple more that you could probably happen in the same thing. They're right there, 6 to 8. And let's enter. Let's make this money, guys. So some common mistakes though when dealing with this, looking for confluence, taking every setup. We don't need to be in all the trades. We need to be in 1 or 2 high probability setups, get our money, and get out of the market. Like I said before, treat it like a bank robbery or something of that sort. If someone gave you money, actually they didn't give you money because they're not trying to give you anything. But um just like a bank robbery. You all watch movies. You're gonna rob a bank and just sit there and be like, all right, I'm just gonna say no, you're gonna get out of there because they coming back for that, right? It's the same thing the market does. If you hit a trade, do not stay in the market. If you stay in the market for that session, I guarantee you, you will have a more than 50% chance of giving it back. If you're if you're just entering trades consistently. Ignoring high time frame bias, like we spoke of before, the trend is your friend. Make sure you know which way the markets are heading because they will wipe you out if you're in the wrong way. Trade outside of active sessions, yes. Trading in dead zones, that is a common mistake. Entering before confirmation, yes, we always need confirmation. We're not just gambling out here. We're waiting for specific things to happen. If they don't happen, we do not take the trade. Forcing confluence. You cannot force confluence. Don't make up stuff that's supporting your outlook. Be real with yourself. You want to either know, is this a good trade or a bad trade? Don't lie to yourself. Don't see things that aren't there. And lastly, don't invent reasons. You find them. The reasons will jump out at you. Just learn to see the reasons. In the end, patience plus discipline equals the profits that you want to get. And lastly, guys, 10 reasons, or I mean, reasons why confluence changes everything. Without confluence, you're going to take on a lot more losses, more emotion. Your emotions are going to be ranging, trading, revenge trading, low confidence in your trade, low consistency, and more stress. We want to be over here with the confluence. We want to have the best entries. We want to have the best risk management possible, higher confidence with our trades, consistent with our trades. We don't stress over here. We just show up. God's blessing us with the air to breathe and the knowledge to do this stuff. Let's knock it out of hand. Let's keep it. Check the mark. Check the boxes off and get the bread. That's it. Don't make it more than it needs to be. And that equals more freedom and things to do, purposeful things that are on your heart that you may not have time to do right now. So we're here to break free, and we're only going to break free if we're doing the right thing and make sure we have these confluences while entering the trades so that we get paid. The goal is not to be in more trades, guys, or more time in the market. The goal is to be in the best trades and position ourselves in the best time in the market to get that. So, any questions, guys, drop them in the chat. I appreciate y'all for showing up. Another blessed Saturday, and yeah, let's go from there. Let's knock out these trades. It's gonna be a great week coming up. All right, bye, guys.